Get to, of course, you can join in the conversation with a question or a comment on Twitter. Just use the hashtag MKTDay, or you can email us as well at yourmoney@skynews.com.au, and we'll try to get it answered for you here. Julie, if we could start with you and ask you about the market. I mean, a fresh 21th high there, nothing to be sneezed at, even though it was light volumes.
It was extremely quiet on the market today, not surprising given that we are seeing the US on holidays. But our market managing a gain of 0.1% with just $3 billion worth of stock being traded. Having said that, it's been a fantastic run up the last couple of months. Out of the last 9 weeks, we've seen the Australian market now rising in 8 out of the last 9 weeks. This week, I think it's going to be all about the miners. We see BHP coming out with its production report on Wednesday. We'll see Fortescue, Panos and Oz Minerals on Thursday. But in terms of the session today, while in terms of sectors, we saw the healthcare and the property sector going backwards and information technology and financial stocks actually gaining, it was all about individual stocks. And if we have a look at which stocks influenced the market today, it was just 2 stocks, and that's NAB as well as QBE. NAB contributed 4 points to the index and QBE contributed 2 points, and that made up the 6-point gain. So it was a stock pickers market today. It was really on the back of the strength that we saw in terms of NAB and QBE, but a really quiet day today.
I mean, NAB shares closed at a 3-month high today.
NAB's stock, this is a turnaround story. You're investing in the company because you believe in a turnaround and a re-rating on the basis of the UK assets. And really we've seen the foundations for a possible sale being put into place back in April, where we did see a fencing around some of those bad assets, and the bad assets are really considered to be the commercial real estate assets, which would be absorbed by the group's balance sheet. And then of course the good assets is considered to be the retail and the small to medium enterprises, and this is probably where the sale or any potential sale would occur and where interested parties would be. If we have a look at the UK assets, there's a book value of about $5.4 billion. So I guess the speculation today is around a sale around that $3 billion mark, so well below that book value. But we know that the UK business has been a drag on NAB. In terms of the domestic business, has been doing well in terms of the retail bank as well as small and medium enterprises. In fact, it's got the lowest standard variable rate out of the big 4, and it has for a while. So it has been taking away market share from some of its peers. So domestically, we have seen a bit of improvement in terms of the business, and there's potential for more improvement. And really, when you're buying into the banking stocks, I guess what you're looking for is which of the banks is going to deliver more capital gain or potential upside. And if we have a look at NAB's stock price, well, it's been dragged down by those UK operations and the underperformance in the last 4 years. We do see a sale of the UK operations. It depends on the price, but if we do see a sale around that £2 billion mark, well, that does signal that perhaps shareholders could see a capital return, and that would see a re-rating of the stock and the drag being removed from the share price. So the potential for a short-term re-rating really driving that performance in NAB today, and the stock doing well.
All right, the stock was up, what, 3.3% today?
It's a big rise, 3.3%. QBE doing extremely well today. But to put the context of some of the media reports that we've seen today, a loss of about 700 jobs for QBE Insurance is really a drop in the ocean. They've got more than 14,000 employees worldwide. But I guess the market just focusing in on the potential for QBE to see a re-rating. What we have seen over the last 3 years is underperformance, and we've seen declining profitability coming through. In fact, just in November, we did see a profit downgrade with the insurance margin for FY13, the forecast being cut from 13.6% down to 11.7%. I guess what we're seeing in terms of the insurers is that the last 3 years we've seen these massive catastrophes, and what we have seen is a rebasing of the premium prices, and that should start to flow through to some of the insurers. So a lot of analysts are quite positive on the insurers at the moment. QBE, though, has been doing it tough. 700 jobs, I don't think it's enough to really turn it around, but maybe a signal that perhaps we could see some more cost-cutting measures coming into play, and QBE doing extremely well today, up by 3.3%.